Right guys, building routine and structure. I've already mentioned routine prior, but I just thought I'd drop this video in here before going forward. So we've done most of the technical tools, to be fair, and you're going to gain extra value from going through the befores and afters and my weekly breakdowns as well, where I'm going to highlight live trade setups and bring the pieces together of the puzzle. So got my notes here. Now what I want to do is, right now, first of all, building routine structure, what to focus on. In the book, I'm not sure if the page number off the top of my head, I haven't got a book with me at the moment, but there is a 2-page checklist. On this checklist, it gives you a little bit of structure. And what I mean by that, if you ever find yourself up in the air and you're struggling with some of the steps, which you shouldn't in the way I've actually broke down all of these videos and technical baby steps, you shouldn't have any issues. But you can always reach into the book and you can read the 2 pages. It's in the journal section where it's giving you highlighted points as to what to do next. So as I've already mentioned, people actually fail in this market because there's so many reasons, regardless of the psychology and the mistakes and traps and so forth. But in terms of technical analysis, they may know a little about a lot in terms of the different tools that can be used, but they have no structure, clear plan as to how all of these are put together. So this is what we're trying to do for you right here. Now you know about the key levels and the importance of your foundations. This is something that you need to really nail. You need to keep it clean, accurate and precise on the charts. And as I've already mentioned, I'm going to be your guide anyway. So we have the monthlies, we got the weeklies, we go to the daily and the 4-hour, and there's also a video that I've dropped in there as well, which I'm going to update in every 3 to 6 months. Where I give you the first 2 monthly key levels on the Aussie dollar, pound dollar, euro dollar, even gold, etc, etc. So I do suggest, please only stick with those currency pairs. And if you're new to trading overall and new to a technical analysis and even new to using a computer, because we have had a few of those guys come through, just take your time and maybe just focus on 2 currency pairs like the euro and the pound, okay? Gold, I wouldn't suggest jumping headfirst into gold if, again, you're quite new to the market and haven't really found your feet with the currencies as of yet. So key levels are super important, and we need to combine those key levels with the candlestick formations. 10 major candlestick formations in the book. Add the 3-pin pattern there as well, so that makes 11. Not all of them are going to be significant on a daily basis. However, you really need to just get to know those and be able to spot them at the drop of a hat. So once you've studied that side of things, and then you're quite familiar with plotting your key levels and just studying the price around the key levels, because again, I'm going to be your guide. You don't have to go into too much detail. I'm always going to be giving you the updated levels. And just one thing, just please keep it clean and precise on the charts. For instance, the monthly range that we plot on there as well, the rectangle, please keep that nice and thin. I'm a little bit OCD on the charts myself, and I'm always updating to see if I can make it any clearer for myself, because clarity and organization is the key to success in your technical analysis overall. Now we have that, so learn candlesticks and your key levels. And also, please relate to the book. I know some of you guys are relatively lazy when it comes to reading, but I assure you we have had great results just from people reading the book alone and taking the points out of the book. The book in itself, I updated it in November 2015 and it was fresh for January 2016 with all of the screenshots and so on. And I've actually pulled it up in some of the videos you may have noticed by now. But again, the information in the videos, the information in the book goes together hand in hand. So please relate to the book, because there might be some gems in there which I've actually missed out throughout some of these videos. Next, we have obviously the trend lines, the various aspects of trend lines we can plot onto the charts and so on. I've already mentioned more or less on each video how to do it. Again, keeping it clean and precise. We don't want to overload the charts, because even though we can be paralyzed by loads of indicators and so on, like MACD, stochastic RSI and Bollinger Bands, and just throwing it all on the charts together, remember, even with our technical tools, trend lines, technical aspects, sorry, trend lines, Fibonacci, all of the key levels and so on, even those can get a little bit wild and haywire and then cloud your vision. So again, keep it straightforward and keep it nice and clean. Once more, I am going to update any trend lines or key levels on my weekly breakdown videos. Fibonacci. Now, Fibonacci is one of the top tools in which we use on a daily basis when analyzing the charts. And I've already said, okay, cool, we can use it on the weekly and the daily for an overall bias of where the market's going to go. And then we can maybe zoom down to the 2 hour and the 4 hour, because remember guys, when you're building your routine and your structure, the idea is to, you don't have to have the split screens up, but sooner or later, with me, I just put up the charts in the morning, let's say, and I will have my daily there. I'll already know about the weekly because again, once I've followed these currency pairs and once you guys have followed the 5 currency pairs and maybe gold for quite some time now, and even some of your own currency pairs, if needs be, you're going to know all of the key levels. You're going to know what happened last week. You're going to know what happened last month and even for that past few days. So, you know, you live these out day in, day out. We don't need a huge amount of currency pairs to focus on. We need to keep it clean and precise and concise, sorry. So Fibonacci talk, if you are not getting everything else before that, okay, please don't try and start stretching Fibonacci's left, right, and center. Main points of focus are going to be candlesticks, key levels, a couple of trend lines on maybe the moving averages, and just identifying the overall market direction. Maybe just start, if you are a beginner, on the weekly and the daily time frames. Then you can start to come down to the 4 and 2 hour. So building your routine and structure, you need to know what time frames you're going to be executing on, which is going to be the 4 hour and the 2 hour. Because if we use the 4 and the 2 hour, obviously we can enter on the daily as well. But if we're focused on the 4 hour and the daily time frames, 4 hour and the 2 hour time frame, sorry, the trade lengths and the amount of pips we're going to be going for is going to be kind of medium term. So you could just maybe hunt for 2 or 3 trades a week whilst you go about your other business. Which gives you again the freedom aspect of things. But when you start coming down to the hourly, the 30-minute, the 15-minute, the trades are going to be, well, the price action is going to be more erratic. It's going to be more, you're going to see more fluctuations on the back end of some fundamental news as well, and it can get a little bit stressful. But we all have our different personality and characters. But all of the tools can be used on all time frames. But it's just my suggestion to you guys to stick to the 4 hour and please stick to the 2 hour for your executions. Now, alongside that, I don't want to make this video too long. What's next? We're going to go through some of the stop placements just to give you guys a fresh insight of maybe a recap of what we've gone through so far, because we always need to think about stop losses and risk reward. So we find the trade, find the direction. Please, please, please get some experience with the news as well. We have already discussed news time and time again. It is a ulterior motive for the banks and the manipulators of the market to use as a screen so they can play around with the price. Yes, hawkish and dovish, you know, it's all in the book. The main ones are in the book. GDP figures, non-farm payroll, and so on. They are going to impact the price overall. The market could be sideways, waiting for a news event which is a week from now, 2 weeks from now. So you just have to be mindful of what's going on there. But you can only really get deep experience with the fundamentals if you are actually putting on your technical analysis properly, as we've taught you so far, and then watching how the news releases actually impact the market, and you'll see the price action jump in and out of the key levels and so forth, and maybe reverse trend, continue trend, but you'll have an overall perspective of it if you get your technicals right and price action. You're reading the price action correctly. Routine is obviously important. So daily close at 10 p.m. GMT, I've already mentioned this. You need to check the market every day. So 10 p.m. GMT London time, that's on the TradingView if you are using TradingView for your analysis, which is the first video which is recommended anyway. Daily, weekly, 4 hour monitoring and execution. Please remember, going forward, you have the timer on the left part of your chart, and it's going to tell you how long until that candle closes. Please be patient and always wait until the candles close before any entry. But we don't want loads and loads and loads of entry strategies. I'm going to break it down as to what we've gone through so far, what to focus on. And believe me, follow my key levels, follow the strategies, be patient, use your risk reward tool. All right, try to avoid the news when you can, and then take the trades based on the strategies that we've gone through so far. And always be mindful, it's because, you know, throughout this course I've tried to cultivate the mindset of you are not a retail trader. Okay, do not think like a retail trader. You need to think like you are one of the guys who are actually moving the market and what they would do in order to screw people over before moving the price. So don't follow the crowd, don't go with the herd. Just take a step back. Again, less is more in terms of your executions as well. And we want to keep that broker at arm's length, remember, and I've already gone through all of those videos anyway. So enjoy the rest of the videos. I'm going to do some videos on how to use all of these tools on alternative markets as well to diversify your portfolio if needs be. So what I mean by that is, the FTSE, DAX, Dow, gold, oil, silver, other markets out there as well. I'm just going to upload them randomly throughout the next couple of months or so. But once you've nailed Forex down and you're quite familiar with the price section, you can then go and use that on other markets as well, which can be quite exciting. Enjoy the befores and afters. I'm always going to be adding to those as well. It gives you a realistic take. The first 7 or 8 were actually in 1 month, and that was a grand total of around nearly 600 pips or so. In 1 month, so that was pretty decent. And what else? Yeah, the weekly breakdown videos. One thing I'd like to just drop in there is sometimes I may not spot something that you guys may spot. Don't take my charts and my analysis as gospel, and even my trade setups. Please just use it as a neutral source of information, and go about your analysis as you would and build your own routine, so you don't even need to look at my stuff anymore, and you can take the tools and you can adjust them as needs be. So enjoy the rest, and thank you.